Hello and welcome. In this lecture video, it's more fun with journal entries. So in the prior lecture video, we ended with the cost of jobs completed, debit to finished goods, and a credit to WIP. Remember that finished goods and WIP are both asset accounts. Finished goods, one asset account is increasing. That's why it's a debit. Work in process is decreasing. That's why it's a credit. Let's look at the last journal entry for this problem, which says that we sold on account $49,000 worth of completed jobs for $85,000. Okay, so this is our sales. This is our cost of goods sold. That's what that's telling you. And it says sold on account. That means we didn't sell it. And when we sold it, we didn't get cash right away. We sold it on account. So that means we have an accounts receivable. So whenever we make a sale, we have two journal entries, one to record the sale, one to record the cost of goods sold. So because it says sold on account, we debit accounts receivable for our $85,000, which is the sales, how much we sold it for, and then we credit sales for $85,000. That's the first journal entry. The second one, the second journal entry is done to recognize cost of goods sold. So it'd be a debit to cost of goods sold. Remember, when we think about the accounting equation, our equity, our assets equals our liabilities plus our equity, right? Those are the debits and credits overlaid on top of the accounting equation. Accounts receivable is an asset. That's why it's recognized with the debit. Sales positively influences equity. So as sales go up, equity also goes up. How do I recognize that equity is going up? With a credit. That's how this journal entry fits into the accounting equation in terms of debits and credits. Looking at the next journal entry, which is to recognize cost of goods sold. Cost of goods sold is an expense. Expenses decrease equity. So as expenses go up, equity goes down. How do I recognize that equity is going down in terms of debits and credits? With a debit. So I will debit cost of goods sold for the $49,000. Now, do I have this inventory anymore? These jobs, these completed jobs, that's inventory. Do I have that? And actually be more specific, that's FG, finished goods inventory. No, I don't have it anymore because I sold it to somebody. I passed title on to them. So I have to recognize that the value of my finished goods inventory, because I sold it to someone else, the value of my finished goods inventory has decreased. Where do we put finished goods inventory? It's an asset. How do I recognize that an asset is going down? Is with a credit. Okay. So credit to finished goods, 49,000. And that is our journal entry right there. So two journal entries when we recognize the sale, one to recognize the sale, one to recognize cost of goods sold. Okay. So here we have another practice problem. And what I want you to do is I want you to pause the lecture video and I want you to do numbers 1, 2, 3, 4, and then number 5 on this next page. Okay. I want you to do those problems. Numbers 6 and 7 on the next page, we will do together. The other thing I want you to think about is see how it says job 101, 102, and 103. These are the direct materials. Okay. This is direct materials, direct materials. You don't need and we know that direct materials go into work in process. You don't need to say debit to work in process, comma, job 101, 4,000. And then another debit, work in process 102, 5,000. You can add this plus this plus this and debit work in process for the sum of those three. Okay? So what I want you to do now is pause the lecture video, do problems 1 through 5 for this practice problem, and then we'll check it. And then we'll do numbers 6 and 7 together. Okay, thanks. Okay, so let's see how you did. So the first one is pretty similar to the other practice problem, right? So we purchase raw materials on account. So debit to raw materials, credit to accounts payable. Issued materials and supplies to production. And again, as I was saying, you can add up these numbers and then just debit WIP for the total of those. So these are all the direct materials, job 101, 102, and 103. We add them all up, we get $14,000. Debit to WIP for the direct materials, debit manufacturing overhead for the indirect materials, and then credit raw materials for $15,000, which is these two added together. Payroll, this is direct labor. We debit WIP for the total, $18,000, that's total direct labor. And then we debit manufacturing overhead for the indirect labor of $3,000. We're not told that these wages have been paid, so it goes to our liability of wages payable for $21,000. Number 4, incurred other overhead costs, depreciation of $5,000, and then miscellaneous overhead incurred and paid $3,000. This one could have tripped you up, but look at what it says. So that means it goes to manufacturing overhead. This means it goes to MOH, manufacturing overhead. So I can add these two together, debit to manufacturing overhead for the total. We know the journal entry for depreciation is debit depreciation expense, and that debit to depreciation expense is wrapped up in this number. Credit to accumulated depreciation. And what probably may have confused you is that term paid. Remember, anytime you see paid, that means credit to cash. So credit to cash right over there. Okay? And then the next one, we have factory overhead is applied using direct labor cost as the basis, as the allocation base. So the first thing that you have to do is calculate the predetermined overhead rate. So we calculate the predetermined overhead rate by taking estimated overhead divided by estimated allocation base. Estimated overhead divided by estimated allocation base, which gives us 0.5. What this is telling you is that we apply 50 cents of overhead for every direct labor dollar. Now, how did I get 9,000? The journal entry, as you can see, debit to WIP 9,000, credit overhead 9,000. How did I get 9,000? Well, how much is our direct labor? It's 18,000. What is our rate? 0.5. So remember, overhead rate times the amount of allocation base used of 18,000 gives me 9,000. That's how much overhead will be applied. Debit to debit WIP, credit overhead. That is the journal entry to apply manufacturing overhead. Okay? So, as I was saying, we're going to do numbers 6 and 7 together. And it says number 6, jobs 101 and 102 are completed. And number 7, job 101 was sold. In order to do numbers 6 and 7, we need to look at our job cost sheets. That's what these are down here. These are simulating job cost sheets. Okay? We need to look at this because we have to figure out the total cost of job 101 and the total cost of job 102 and 103 in order to do this journal entry and also in order to do this journal entry. So if we look at the prior page, it says that there is a beginning balance in work in process for job 101 equal to $2,000. Right there, equal to $2,000. And that's the only one. So I'm going to put down $2,000 work in process, 0. We were not told that there's any, so we just assume 0. And then looking at their prior page, you would see that job 101 had $4,000 worth of materials, and job 101 had $6,000 worth of direct labor, $4,000 of direct materials, $6,000 worth of direct labor. So the question becomes, how much overhead does job 101 get? How do we figure that out? By looking at our rate. Our rate is 50 cents of overhead for every direct labor dollar. How much direct labor dollars did job 101 have? 3,000. So 6,000. That's 3,000 is how much overhead they had. I got ahead of myself. 6,000 in direct labor. times the 0.5 means we apply $3,000 worth of overhead. And now what we can do is we can add up all these numbers. Our labor plus our overhead plus our materials plus our beginning WIP. And then that gives us our total product cost of $15,000. This is the total cost of job 101. Okay. Job 102, if you looked on the prior page, $5,000 of labor, and then $5,000 materials, $8,000 of labor, and then overhead, therefore, would be $4,000. We add up all these, the total cost of the job is $17,000. Then we can continue on looking at job 103. Our materials, $5,000. Our labor is $4,000. Therefore, our overhead is $2,000. We can add up all these. We get a total of $11,000. Okay? So now we can do number 6 because it says jobs 101 and 102 are completed. So what's the total cost of jobs 101 and 102? $15,000 plus the $17,000 gives me $32,000. And then I need to think about the journal entry to record the transaction when we've completed a job. Remember what happens is it moves from work in process to finished goods once it's completed. Finished goods is an asset. Work in process is also an asset. So I'm going to debit finished goods. I'm going to increase finished goods and decrease WIP. Since these are both asset accounts, that means debit finished goods, credit work in process, and then the total amount would be the $32,000, which is the total cost of jobs 101 and 102. I'm going to write it down here. Debit finished goods, 32. Credit WIP, 32. Okay. Now we can look at number 7. Job 101 was sold on account during January for $20,000. I want you to pause the lecture video and I want you to try to do number 7. And remember that there's 2 journal entries to record the sale. Okay, hello and welcome back. So you should have had a debit to accounts receivable, credit to sales, debit to cost of goods sold, and then credit to finished goods for the cost of the job, $15,000. The $20,000 is the sales price. Okay, so let's look at our T accounts over here for our raw materials, work in process, finished goods, cost of goods sold, wages payable, and manufacturing overhead. So we had a beginning balance in raw materials of $1,000, which was given to us on the prior page. We looked through that first one. It said that first transaction, we purchased raw materials on account for $18,000. And then we used $15,000 worth. That means we have $4,000 left over in raw materials. So remember with the raw materials, some of those go to WIP, some of those go to overhead. So let's look at this. So we had beginning WIP of $2,000, $14,000 worth additional costs right over there in terms of our direct materials, $18,000 of direct labor. We had $9,000 worth of overhead applied. Jobs 101 and 102 are completed. That means they return over here. Okay. So now what I can do is I can add up all these and subtract 32, and then that gives me $11,000, which is the balance in work in process. And then look, that is job 103. Why is that? We weren't told that job 103 was completed. We were not told that. And by the way, this is cost of goods manufactured. That is COGM, cost of goods manufactured. Beginning WIP plus additional costs minus ending WIP gives me my cost of goods manufactured. I have zero balance in beginning finished goods. I had $32,000 of cost of goods manufactured. And then what I says that job 101 was finished but not sold. So that gives me, job 101 was sold. Job 102 was finished but not sold. 15,000. And then I will continue the rest in the next lecture video. Thanks.